Hi everyone, my name is Peter Pakulski. Today we'll continue creating financial model of a truck, and today it's time for us to create the cash flow statement where we will be able to see how much financing we need to start the business, what will be the payback period, simple, discounted, and so on. The only place where we can see the financial efficiency inside financial model, it starts with the cash flow statement, because all financial efficiency, net present value, net value, profitability index, internal rate of return, they are all calculated after cash flow statement is done. So we have to calculate a discounted cash flow and so on, so everything goes to cash flow. So cash flow statement is 99% is an automized statement, so we don't put any inputs inside the cash flow. So right now I'll be creating cash flow statement from scratch. If you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order financial model for your business ideas from scratch. We can help you with that. So, and let's start. So first of all, we create the timeline for our cash flow. Starting from revenues, so our revenues are formed by revenues from mileage, and also our revenues, and the second component of the revenue is when we sell an oil. So we're going up, then we find the moment when we sell an old truck. Here it is.
This is the revenues. Then we move to direct costs.
We're talking about variables. So what variables do we have? So we go just from the top to the bottom through our financial model and pick all variables. So first of all, it is service expenses for our truck. Here they are. Then we move forward, gasoline expenses. Then we have other direct costs. So these are direct costs. Now we're moving to fixed costs. We put fixed costs from here, so we don't put any manual inputs inside cash flow statement. So now we move to payroll. So we're just gathering cash flows from our financial model, and that's it. So now we have revenues, direct costs, fixed costs, payroll. Now we're moving to taxes. So for taxes we will just create some additional block of inputs. So for example, we'll have revenue tax. We will have profit tax. We will have salary tax. And we'll have asset tax. So these will be the inputs. So we'll mark them with our specific color that goes with all of our inputs. So revenue tax value will be, for example, 3%, profit tax, for example, will be 4%, salary tax will be, for example, 5%. We will pay $2,000 monthly for asset tax, And now we move back to taxes. So this will be the revenue tax. We will later get back to profit tax, then we move to salary tax. Then we move to asset tax, so we take the value of this tax and multiply it on the line when we have operating activity. So operating activity status is here. 0 means that we don't have operating activity at the moment, and 1 means that we have an operating activity. So operating activity starts from September 2022. It is here. So we link this formula to this line. Calculate the result from operating activity. We take revenues minus direct costs minus fixed costs minus payroll minus taxes.
So this is the result from operating activity. Now we move back to the beginning of our cash flow statement. Now we describe investment plan.
So our investment plan consists of 2 blocks. The first block is
Initial investment plan.
but the except purchase of the truck. Then we add the purchase of the truck. So now we calculate the result from investment activity. So we put here a minus sign because investment is the outflow of money. So this is our investment plan. This is the purchase of our truck. Then we move to our financing activity. So first we start with equity. Then we move forward with the loan. Here we take the loan. This is the line for principal payment.
This is the line for
interest payments. This is the line for leasing payments. Let's just go from top to the bottom to see, maybe we've just forgotten some lines to add. So added revenues, we added.
truck service, we added.
Leasing, truck purchase, we added. Gasoline added, fixed costs added, payroll added, direct costs added, and plan we added already. So this will be the result from investing activity. So maybe this will be the only line for inputs. So we take
equity plus loan minus
principal payments minus interest minus leasing
So now we create, now we move to the top
to calculate the profit. This will be the base for the profit tax. So this will be revenue minus direct costs minus fixed costs minus payroll minus revenue tax minus salary minus asset tax minus principal minus interest minus leasing
Then we calculate the profit tax itself. If tax base is more than 0, then we pay this tax. Then 0. So now we create line for cash balance at the end, at the beginning of the period. And here we calculate cash balance at the end of period. This will be the end of cash flow statement. So how we calculate cash balance at the end of the period? We take the result from operating activity plus the result from investment activity plus result from financing activity plus cash balance at the beginning of the period. Then we put this value here. Then we put the formula here to the right. And then we extrapolate this formula to the whole of our timeline. So here we can see that we have losses. For example, we can go back to our inputs, adjust, for example, coefficient to price, for example, to like this. We can go back to our results. We can see here the profit, so we can now play with inputs, create numerous amount of scenarios. So our next video will be devoted to calculating the amount of financing that we need to start the business. We've already created the cash flow statement, and now it's time for us to answer one of the main questions. So how much money we need to start the business, what will be the payback period of our business idea. So I hope you liked this video. Give us a like, please share this video with your friends. Also, you can order a financial model from scratch for your business idea. We can help you with that. So see you next videos. Thank you and bye.